Hello everyone, this is Red with RedDragonLeo.com. It is Sunday night, the 27th of November 2011, and we're looking at the monthly chart right here. I want to go over this just to kind of get a big picture of what we're still facing here. A lot of people, we're all assuming that, and myself too, we're all assuming that the market is ready to bounce and because it's so massively oversold. Yes, it is, but I want you to think about this for a moment and look at where we are when you really compare this to the larger time frames like the monthly and the weekly, and we're going to get on that here shortly. But to look at when we first had the sell-off back here, and it started down right here. We had 1, 2, 3, 4, 5 down months in a row. Then we had one nice positive one, and now we're starting the third one. So essentially this is a wave one. We're in a that was a wave two, that one there, and we're now getting ready to go into wave three on a monthly basis, folks. On a monthly basis, this is extremely bearish. And look at where we are here. We do have a bearish cross. We are pointing down. We are now pointing down below 50 here. When we started right here, again, when we started here, we were up here in bull territory. We're now below the 50 mark. Okay, when you get to 33, that means there's 3 to 1 selling. I'm sorry, 2 to 1 selling. Let me get this right. 33% means there's only 33 bulls buying versus 66 bears selling. So it's 2 to 3 for every 3 shares. 2 are sold and 1 is bought. I mean, that's kind of what the relative strength index means. You can see we're curling for a big move up here on the ADX line. So you can obviously see on the charts. Do you really think it's going to be the green line that's running on up? Of course not. I mean, the way it's looking, it's definitely going to be the red line that's going to move up if it's the ADX. So on a monthly basis, there's still plenty of room for this to go down. I mean, I know that we end the month out next week, so very possible we could run right down here and bounce and hit this 200 MA right here, and maybe we pierce it and we come back on Wednesday and close out the month on Wednesday, November 30th, positive. And maybe we close somewhere around that area after piercing it. Very well, we could pierce it and come right back. I don't know, but I am expecting a crash on Tuesday the 29th. So, and look at the other stuff down here that you can clearly see here. Look at where we are here on the full stochastics. All the way down here below 50, again, still pointing down in bear territory, still pointing down in bear territory. Everything tells you there that it's bearish on the larger time frame, the monthly. I mean, it tells you December should be a bad month too. But again, that 100-day moving average there could very well be, the bouncing point. Of where, or 100 period moving average, not 100 day, 100 period moving average could be the bounce, could be where they close out the month. But that does not mean that it won't pierce it, that it doesn't come down and do one of these numbers and pierces it and comes back and just closes, in with the bottom of the bar right like that. It could very well do that, because it could do that on Tuesday, and then you start down the next month, December, before the week is out, and we keep on going down into I think we're going to hit 965. That's where I think we're going to hit, and we very well could hit that by December the 7th, because again, there's something significant to that Illuminati website that has a countdown on it, that Illuminati.org has a countdown, and it ends on December 7th. So that is something. I don't know what it means, but it's significant. So do we bottom out here at 965? It's got to be nasty, because again, that was a wave one, a wave two, and we're in a wave three. So it's got to be nasty. And that's on a monthly basis. December could be a horrible month. It might not end on December 7th. I don't know. I mean, maybe if it goes down here first, and maybe if it breaks that and then comes back up, maybe it could. But right now, it's not looking good for December at all. And this here is just no signs of coming as curling up here. None here at all. So when you look at the bigger time frame here, it is very, very bearish. And that's why we're not getting any significant bounces. Look at this. Look at this right here. Look at this. You're at 42.12 on the RSI, pointing down hugely. When you get below 33, remember what I said. And this is a weekly chart. Weekly chart. This tells you next week is not likely to even have a chance of closing positive. Just looking at this, it's just majorly bear territory. And you look at it down here as well, and you can clearly see everything down here pointing down, getting ready to have a bearish cross, pointing down. Can it curl back up? Yeah, it can, but it's not showing any signs of it right now. It's not showing any signs of it at all. So, you got the monthly one that's pointing down. The daily is the one that is massively oversold. These are not. This is only two weeks down. Here you had 1, 2, 3, 4, and that was 4 weeks down, and this was in our wave 1 down. We're in a wave 3. There's no miscounting this. This is a wave 3. That was your wave 1 on the weekly. Here's your wave 2, and here's your wave 3 on the. And then you'd have a wave 4 and a wave 5. This is all on the weekly chart. There's only 4 weeks down here on this wave 1. We are only in 2 weeks right now. We're only 2 weeks in. 2 weeks is all we've got. Do you really think that in a wave 3 down, being that's a wave 1 down on the weekly, that this coming week is going to close positive? I don't think so. Matter of fact, I think it's going to fall right through that 200 moving average there at 1136 and fall right on down. And we very well could go on down here and hit 1,000. I know it seems extremely bearish, but in a crisis situation, we could very well go on down here to this 965 and hit it and then bounce. And actually, one of the reasons I did that, I think I drew a line. I think it's right like this, hitting, I think I was hitting this top. I was skipping that one and going on down. No, it wasn't that one. Maybe it was this one. But I think if you draw a line right here, somehow or other, it ends up to approximately in that area right in here, 965. Obviously, I kept on going there, but you can just see, depends on when it hits it. But, and that's, I don't think it hits this top here. Just hitting this top, and this top, and then drawing it wherever it draws. And it puts you at 965. So let's actually do that on another chart. I'll pull down the actual SPX here. And go from it that way. Okay. And the 965, let's look at it here on a 2-year basis, I believe. Okay. And I was drawing this line, I think, right here. I think. Is it this one? No. No, we've got to look at more than 2 years. Let's go back to 5 years. Okay, it was on this one right here. Is what I was looking at. So it's not drawn exactly right. I think I did this on the daily. So I wasn't sure which one I was drawing it on. Yes, I did it on the daily. Okay, so what I did was I attached the top here back in 07 to the top right here. And I attached those two lines and drew it down here. And it ends up being below 1,000. Depends on when it hits it. But I think by the time we hit it, it's going to be around that 965. And that's one of the reasons I think that is going to be a significant bouncing point. These are trend lines. These slanted trend lines are trend lines that people don't really pay as much attention to. They pay attention to the horizontal. But the market actually pays more attention, in my opinion, what I've noticed at least, that pays more attention to the actual slanted trend lines. It gives them more power for whatever reason. They are seem to be more powerful. Now look at the sell-off that we had here, by the way, on the daily, and how deep we went, and then how deep we are right now on the daily. Look at where we was right here in this wave 1 down. Remember I said this was a wave 1 down right here back here in August. This was your wave 1 down. Now we've had a wave 2 up. Now we're starting a wave 3 down. Now you see how oversold we was there. And we were all the way down to negative 45 on the daily on the MACDs, moving averages. We're here only, what, negative 20. So it seems like, goodness, how can we go any further down? Well, this should tell you right here that you certainly have more room to go down before this thing finally gets massively oversold. You'd want it to put in a higher low than this one, obviously, but it still could easily go down to 30 or 35, maybe even 40, because this one here was obviously at about 45 or something. So maybe it goes down to 35 before it turns, because it's only at negative 20 or something in that area right now. It's hard to see exactly. If I zoom in on it right there, there you go, you get a better picture. You can see that it could continue down quite a bit before it actually turns back up. And then counting the days of this is very, very important. Here you've got 1, 2, 3, 4, 5, 6, 7 days before a positive close. That's where we are at right now. Right now we are at 1, 2, 3, 4, 5, 6, 7 days without a positive close. If we close Monday, we very well could. If we close Monday positive, we very well could be looking at this for Tuesday, and then the rest of the week, Wednesday, Thursday, Friday, before it finally, it closed out the week really horrible. But for whatever reason, just because we're in a wave 3 down, and because this here move was basically your wave 1, I don't feel that it's going to match this pattern completely and do exactly the same. As a matter of fact, I think we're probably going to go past, as we're going to have a red close on Monday and on Tuesday, making it 9 days down in a row, then bounce and put in a positive close after the crash. And you can see right here, after the August 8th crash right here, we had a massive rally up and recovered about 2/3 of that. Then it sold right back down. Okay, but it was already so bottomed out right here that obviously, it did put in a bottom and continued on up. And it also hit this trend line from 8/4/2011, from August the 4th, starting at 8/4/2011. Oh, I'm sorry, that I put that trend line in there. Okay, I put that trend line in here to see that. That wasn't okay. Sorry about that. I was thinking it continued from a much deeper point. Here's the one from May, the second high. This should be a significant point to where you could possibly see the first bounce. This very well could be the crash. If we were to crash on Tuesday, like I suspect, draw this line on out, and that easily put us down at 1100. Well, you draw it on out into Monday, Tuesday, 2 more days. It could put it at 1,000. You could very well put it at 1,000 roughly before, because there's 1090, and you could hit that line before you have a bounce back up, and then we should continue back on down. Because remember, again, this is going to be